Hello traders, and welcome to the third video within section number 5 of the IPDATrader's private mentorship course, where we talk about risk management. And this video, guys, is going to be fairly short. So far you understand pretty much everything there is to risk management, right? You understand you have to have certain criterias that you have to follow in regards to managing your position in order to achieve consistent results. And once again, you will find the template for the risk management system within the section over here, section number 5. So what we're going to be doing in this video is answering one question that is asked very frequently, and that sort of needs to have an answer for you guys. So I will be trying my best to make this very clear. So what we're going to be doing now is jumping right back here, and we're going to imagine we have a market that looks something like this, right? Let's say you have a market like this, you identify the break, price returns, you wait for your point of interest over here, and price hits your point of interest. Right now you're zooming into lower time frame and you're watching order flow for those breaks and shifts. So let's say price actually gives you your external break over here, then retraces 50% plus, just as confirmation rules tells us, and then we wait for the internal break, and now we're valid to take sells. So at this point you decide that you're going to be placing a sell limit at this point, at this block, with your stop loss above the high, and expecting price to return here and continue lower, right? And that is a very valid expectation to have. However, what happens if actually price never taps you in, right? Instead of price coming back up and tapping you in your entry, actually retraces a bit, fails to hit your limit, and drops aggressively lower, right? And I get the question of, should I remove my limit? Should I keep it? What am I expecting at this point, right? Is this confirmation play still valid? And the answer for that, guys, is that what I personally do, if price sort of fails to tag me in, which is very common and will happen, then if price actually went ahead and achieved an area where I will partial, for example, this low over here is a great partial area, what I request and what I say myself is that I'm going to be removing my sell limit instantly, and I'm going to be waiting for a single break. If price then happens to trade back into where I had my limit is no longer going to be there, but I'm still going to be monitoring this area for a potential break, right? If then price returns, right, it starts retracing once again, my limit is no longer there, I will be watching this block, and if price happens to then give another break over here, just a single external break is fine for me at that point, because I already have the other confluences over here, right? So I then wait for that one more break, and if that occurs, I try to get in at the breaker in order to make sure this time I'm really going to be tagged, or I wait for the POI at the top, right? But this is the simple rule right here, right? If price fails to tag you in and actually moves far enough for you to have actually taken a partial if you were in the position, then I will remove my sell limit, in this case sell because we're looking for sells, and wait for another break as price returns into my sell limit area, which is this area over here. I would then require one more break, and if that occurs, I will try to enter either at the breaker or at a order block over here, right? I hope this explanation made some sense to you. It's once again pretty simple. So let's quickly do an example for a bullish buy limit that never gets triggered, right? And then we're going to be moving back into the charts and discussing that over there as well. So do not worry. So let's say this time it's a bullish scenario, right? We have something like this. We get a break over here. Now you're expecting this POI over here to get respected, right? And that indeed happens. Price trades in, gives you your confirmation, right? Let's say external shift over here, retracement 50% plus, internal break. Now you're valid for buys, and you understand that you have multiple points of interest where you can get involved. So you decide that, hey, I want to maximize my RR gain, so I'm going to be waiting for the lower one. Well, price trades into this one over here, this point of interest, and moves higher, and once again misses your entry, which was waiting at this block over here. If price then once again reaches an area where I would actually take partials, which could be a structure point over here, right, just like this one over here, then I would require a new break as price returns into my area where my buy limit was set, right? Pretty simple. If price trades aggressively higher, I'm not in the trade. I'm going to be waiting for my buy limit area to hit, but my buy limit is no longer going to be there. I'm just going to be watching it just in case I get a single break, and once again, a single break is enough for me to show that the bearish momentum that was coming down is now shifting back bullish with all the confirmations that I have over here, right? I have a structure point over here that caused a break in market structure. I have a origin of a swing, and I had my confirmations. So one single break at this point would be enough for me to take buys once again, right? I could then get involved in the breaker or wait for the lower POI over here. That is completely up to you, but I would regardless keep my stop loss still below the low, right? So the rule is pretty simple. If price reaches an area where you would actually take partials and you are not in the position because price never tagged you in, then I require another break as price trades into my buy limit area in this case, right? It's pretty simple and straightforward. So I really hope that made some sense for you guys. And we're going to be jumping right back in the charts, and we're going to be looking for an example that I've actually prepared for you guys. So this is GBP USD on a 30-minute time frame. This is a point of interest that is very valid, that you could potentially be expecting bullish mitigations away from. And we're going to be using the replay tool for this, and we're going to be watching price as it develops within our point of interest, right? We watch price, and at this point we're watching it, and we understand that once price trades above this high over here, we have shifted external structure, right? External shift. So we're not doing anything just now, right? Let's actually slow this down a bit and let's see what happens. So price plays around. Nothing too interesting so far. So we're still waiting. Okay, now we have our external shift. Now we are waiting for that 50% plus retracement, right? And you want to grab your fib and you want to drag it from the bottom to the top over here. And you want to wait for that new higher low structure to be established, right? So you wait for that. There we go. We retrace at this point. We've shifted externally. We have that 50% plus retracement. So that internal break would signify me that I'm valid to take buy positions over here, right? And we're going to be labeling that. And once again, this is pretty simple, right? So internal shift, we wait, and let's see if our entry criteria gets fulfilled. Actually, we make a new low, so this doesn't matter once again, and we have to restart the entry protocol right here. So let's see what happens this time. Okay, we shift externally once again, because you know that you have to ask yourself, where did this low come from? And you can clearly see that this low started over here with this up move before the down move. So you know, once we trade up off this over here, we have shifted externally once again. So we label it external shift. And now we're waiting for that 50% plus retracement in order to establish a higher low structure. So let's see. Okay, we have to redraw our fib because we actually pushed a bit higher, right? So we redraw it, not a big deal. Now we have that 50% plus. If price was to get above this high over here, I'm looking for buys at this area, right? So let me grab the tool once again and let's see what happens this time. Not yet, not a shift. Okay, now we shifted. Now we're valid for buys, right? And you have multiple choices at this point. You can very much use this point of interest over here, right? And you understand now variant one, which means you can potentially have a buy limit over here with your stop loss below this block, but accepting the idea that price could very well trade into this block first and then move higher, right? So you sort of have to split your risk once again, put your stop loss over there, and you'll take profit at the external structure, right? And you could potentially add the other risk over here. Same idea, stop loss below the low, or you could potentially use the same buy limit over here, but covering all bullish POIs, which means that you are going to have a bigger stop loss, but that is also absolutely valid. So what I would actually do in this case is sort of include the last sell to buy zone over here and sort of do it this way, right? Maybe a 6-7 pip stop loss, and you could target way higher because you know that you are in a point of interest, which is pretty much discount pricing, and you can expect potentially that Asia high to get taken out, right? You should address higher time frame. I cannot go over there because otherwise the candles would print, but that is what you actually need to do. So let's actually continue over here. Let's see what happens, right? So we're following price. We understand that at this point we're valid to take buy entries and we have a limit placed. Now we're expecting that retracement back down so that we can take the buy and continue higher, right? But let's see if we get the scenario where price just pushes higher and you don't get an entry. So let's watch. As you can see, price sort of retraces a bit, but then continues aggressively higher, right? So let's keep playing price. As at this point, you should be aware that, hey, price may have moved too much. This buy limit over here may now not be valid anymore. So what you want to do, as we discussed before, you want to wait for price to trade back in. You want to see some sort of break, right? Whatever it may be for you. And then you can add your buy limit back again, maybe into an area over here to continue higher, right? But at this point, I would not be comfortable in keeping my buy limit over there, even though it can still work, right? But I want to see that shift in direction once again, so I know I'm not sort of trading against the heavy bearish momentum that may actually happen as we trade down, right? So let's get rid of the joints and let's keep playing price out, right? So now we say to ourselves, this buy limit is no longer valid. However, I will still be watching this area, and maybe that now that you see that we've moved higher, you want to include more of it, right? So let's see what happens. Price sort of plays around, and at this point, so you can see if we would have left our limit over here, price would have hit the limit and continue way higher. However, we didn't know that at the time. All we saw as price was trending down after moving higher is that we had bearish structure building up. So you want to wait for some sort of break. In this case, a break over here would be absolutely valid for me to confirm that, hey, we're indeed pushing up once again, and now I want to try to get in, right? So let's see what occurs over here. Okay, let me slow this down so we can do that. And let's see, at this point we traded above it, so I'm absolutely happy with taking buy positions maybe at this block, which as you can see is potentially a last point of true mitigation that is sort of being built right now, right? And this is where you start putting all the ideas together, right? You can see how they work hand in hand at this point. So we address the structure break, right? We see that we broke with a wick, so we can expect that deeper retracement that then should lead into the higher prices once again. So we do that, and we're actually going to be waiting and playing price out once again, right? Let me get rid of some of this stuff over here, and we understand that we broke the structure point with a wick, so we understand that deeper retracements may be on the way, right? But at this point, I would be absolutely valid that, hey, my buy idea from this area over here is once again valid, because even though we traded higher, we actually came back down, mitigated the block, and provided a single break, and that is enough in this case, right? Whether you want to put your stop loss below this area or below this area, that is completely up to you at this point, but we're going to be keeping it over here, and once again we're targeting way higher because we understand that we are playing a structural play from a higher time frame, and we're watching the mitigation occur within a lower time frame. This is where the ideas of fractal actually come into play, right? So we could potentially use this Asia high as a target, as we said before, right? Just as an example. So let's see if price actually comes back down, because there is a probability that now price will continue up and we miss the trade at that point. There's nothing to do at that point. You have to reassess everything. So let's wait and see. Price starts dropping a bit. Let's see if we get that entry. Price is slowly trading down. Let me actually speed this up a bit. So we get our entry. We're in the trade now, and we're still in it because remember, spread will not affect your buy positions, only sell positions in regards to your stop loss, right? So we see another break over here. So if you're comfortable with this, you could potentially add a re-entry at the breaker over here, or not, right? Depending on how much risk you have for the day. But for me, this would be fine. So let's keep playing price, right? Let's see what occurs over here. We speed this up and let's see what happens. So we sort of shift higher, and this is how you deal with the situation of price moving too far from your entry point, and now you're not sure if you want to keep your buy limit, right? So once again, just to make everything clear, if price moves too far for your liking and you're not entirely sure of your buy limit, if it still makes sense, you want to remove it and you want to wait for your block over here to get tested. You want to see some bullish mitigations away, maybe a break, just like we had over here, this area. And if that occurs, then you're valid to place your buy limit once again with the same risk, same idea, same risk management system, and everything else we've been discussing throughout this section. So that is going to be it for this video. Once again, I know that this is a shorter video, but there's nothing else for you that you need to know in regards to risk management system. I gave you everything there is. We spoke about the different criterias, how they look, what they mean, how we can create our own rules to determine that. And lastly, remember that the risk management PDF file that you can use to create your own system will be uploaded within this channel. So feel free to check that out, fill that out for yourself, test it for some time, journal everything you do, which is something that will be covered in trading plan section. So also stay tuned for that. But that's going to be it for this section so far. So I really hope this section really sort of provided clear guidelines in regards to managing your risk, because it's a crucial aspect of trading and you need to understand that very well. Regardless of that, you can always message me, you can always use the community and sort of take advantage of the resources that are available over here. So with all that being said, I wish you all good and profitable trading. We'll keep in touch, and the trading plan section will be dropping very soon as well, so stay tuned for that. I will see you guys very soon. Thank you.